This is Chanel Bunger with the Becker Business Minute and Becker Private Equity and Business Podcast. And today I have the privilege of speaking with Matt Wolf, Healthcare Senior Analyst and National Healthcare Business Valuation Leader at RSM. Matt, thank you for joining me today.
Thanks, Chanel. Thanks for having me.
Perfect. Well, let's jump right in. What are some of the trends that you're watching currently in the private equity space?
Yeah, I think one of the big trends that we're really watching, especially post Powell's conference yesterday, at least as of this recording, the macroeconomic cycle, interest rate cycle, and ecosystem kind of downswings or potential recessions in various ecosystems. But at a high level, it's really a lot of talk about the interest rate environment. We saw Powell sort of, at least in our view, reassert yesterday that they're unlikely to see rate cuts this year. However, we see rate cuts priced into the market. And I know some of the sponsors that we work with and talk to, they're perhaps more optimistic that there will be rate cuts. We'll get back closer to sort of a pre-pandemic rate environment where money flows a little easier, is a little less expensive, I should say, and more deal activity happens. But in our view, we think that might be kind of optimistic, right? All the signals that we've heard from the Fed and the FOMC seem to suggest that we're going to remain in this relatively elevated rate environment for some time until we really see a more systemic reduction in inflation. And I think what that means for a lot of the sponsors that we talk to and work with is we're just going to have to get used to this new deal environment, right? As much as it would be great to go back to 2021, that's just not likely. And so we have to find new ways to deploy capital so that we can generate returns, create the value that we need to get deals done, and then also think about new ways of investing in those businesses, given current uncertainty and forthcoming changes in that macro environment. So, I guess in summary, we're seeing certainly public markets and even some private equity sponsors trying to fight the Fed, which seems incongruous with history and what we've seen in the past and what's worked in the past. And so we're trying to identify ways of navigating this new environment under the presumption that interest rates are going to remain where they are for some time. We'll see at least 2 more increases this year and then likely a hold. And so how do we navigate through that environment is where we're spending a lot of our time.
Perfect. Thank you. And yesterday I asked one of your peers, Rick Kess at RSM, kind of the same question, but there is this looming possibility of a recession. What do you think would happen if that actually did happen to the private equity investing space?
Yeah, I think it's important to contextualize that R word. If we think back to the past 2 recessions that we encountered, we had the pandemic, which, according to the National Bureau of Economic Research, technically wasn't a recession, but I mean, practically it really was. But that was caused by a once in 100-year global pandemic. And prior to that, we had a global financial meltdown or near meltdown, essentially. And what's similar about those 2 events is that not only were they kind of caused by these sort of exogenous events that were sort of independent of the typical business cycle, but they also hit pretty much all industries at the same time, with a similar-ish magnitude, right? At least compared to other historic recessions. What we expect to see coming forward, probably in the second half of this year, is a more typical, if there can be such a thing, recession or end of the business cycle, end of the macroeconomic cycle, where we're going to see different industries, different ecosystems fall into recession perhaps at different times and to different degrees. And this is it should look different than the last two. And it will again we'll see recession at different times in different industries, but it's going to be more of that just typical end of the business cycle, typical end of the macroeconomic cycle, unlike the last two recessions that we saw, hopefully more normal.
Thank you. And I want to thank you, as always, for keeping us updated on all of this. And I want to thank you for joining me today. Thanks, Matt.
Thank you, Chanel.